Hello, everybody. Adam Bergman here, tax attorney and founder of IRA Financial. And on today's video, using margin with your IRA. What do you need to know? Can you do it? How does it work? What about option trading? Shorts, longs, puts, calls. How does that work? Does that trigger up? You bet. Well, spend the next few minutes with me and you will find out. This is a very important topic because lately I've been getting a lot of questions from people about potentially trading options or doing all kinds of very sophisticated trading with their retirement account. And the question is, can you do it? Number one. And number two, does it trigger UBIT, unrelated business income tax, based off the margin rules? So I'm going to explain everything to you. Don't worry. I'm not the most sophisticated investor, so I'm just going to give you the basics on option trading, but more importantly, I'm going to discuss how it applies to the UBIT rules and whether it would trigger UBIT. So without further ado, let's get started. So I'm just going to go through some basic option rules, just so everyone understand what option trading is. An option is essentially a derivative, a contract that gives the buyer the right, but not the obligation, to buy or sell an underlying asset or security on a certain date, the expiration date, at a specified price, which is known as a strike price. There are two types of options: calls and puts. American style options can be exercised at any time prior to expiration, and European style options can only be exercised on the expiration date. Here's some basic option terms to know. Calls, it's an option contract that gives you the right to buy stock at a set price within a certain time period. A put is an option contract that gives you the right to sell stock at a set price within a certain time period. The expiration date is the date when the option contract becomes void. It's the due date, essentially. The strike price or exercise price is the price at which you can buy or sell the stock if you choose to exercise the option. And the premium is the per share price you pay for an option. And the premium consists of intrinsic value and time value. So just some basics on call and put options, because those are the primary types of options. A call option gives the buyer the right, but not the obligation, to buy the underlying asset at the strike price specified in the option contract. Investors buy calls when they believe the price of the underlying asset will increase, and they sell calls when they believe it will go down. A put option gives the buyer the right, but not the obligation, to sell the underlying asset at the strike price specified on the contract, selling short. The writer, the seller of the put option, is obligated to buy the asset if the put buyer exercises their option. Investors buy puts when they believe the price of the underlying asset will go down. They sell puts if they believe it will increase. So you can buy calls and sell calls. We'll just briefly talk about buying calls, selling calls, and buying puts and selling puts. So the buyer of a call option pays the option premium in full at the time of entering the contract. Afterward, the buyer enjoys a potential profit should the market move in its favor. The spot price of the underlying asset does not rise above the option strike price prior to the expiration date, then the investor loses the amount paid, or the premium. Selling call options. The call option seller's downside is potentially unlimited. And this is important to know. As the spot price of the underlying asset exceeds the strike price, the writer of that option incurs a loss accordingly, right? Prices of the security can, technically go up in unlimited fashion. So if the market price of the underlying asset does not go higher than the option strike price, then the option expires worthless, and whoever sold that option received the premium. The issue for selling that option is if the price of the security keeps going up, 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 and you have to cover it. Obviously, you're going to lose a lot of money. Buying puts. A put option gives the buyer the right to sell the underlying asset at the option strike price. The profit the buyer makes on the option depends on how far below the spot price falls below the strike price. Okay. If the spot price is below the strike price, then the put buyer is in the money. If the spot price remains higher, then the strike price is out of the money. Selling a put. The writer of the put is out of the money if the spot price of the underlying asset is below the strike price of the contract. The loss is equal to the put option buyer's profit. Okay, so those are the four types of option uh, terminology type transactions, right? There's calls and puts. You can buy calls, sell calls. You can buy puts, sell puts. Okay, and that's I think enough basic option information that you're going to need to know. So now that you know what option trading is, let's talk about UBIT. So UBIT, unrelated business income tax. I mentioned this, over the years. It's an ugly four-letter word. Why? Because it imposes potentially a 37% tax, which follows the 2023 trust tax rates, on certain IRA or 401k transactions that would otherwise be tax exempt. Three general ways to trigger UBIT for an IRA or 401k. One, an IRA or 401k uses margin, which we'll get into that in a minute, to buy an asset or security. Two, an IRA uses a non-recourse loan to purchase real estate. There's an exemption under 514c9 for 401ks that can use a non-recourse loan to purchase real estate without triggering the UBIT tax. And then thirdly, which applies to both IRAs and 401ks, if an IRA or 401k invests in an active business like a gas station or a restaurant operated through a pass-through entity like an LLC. If the business, the gas station, the tech company, the software company is set up as a C corporation, then that C corporation blocks the application of the UBIT and there's no UBIT. That's why when you buy mutual funds, ETFs, or publicly traded companies, you don't have to worry about UBIT because pretty much all publicly traded companies are C Corps. So there's already a corporate level tax of 21%. So there's no additional need to impose another tax if a retirement account was involved in that transaction. So let's go back to margin. Okay, what's margin? Margin is essentially a loan. Okay, so whether you're buying real estate or you're buying securities, margin is a loan where a brokerage firm will literally give you money. Okay, they won't give you stock. They'll give you money based off the collateral you have, which is generally the assets or cash you have in your brokerage account. And they will lend you maybe 50%, 100%, maybe 10%, depending on the circumstances, cash. So you can go out and buy more securities. So margin obviously is risky, but it's also potentially super rewarding because if you guess right on your investment, you can supercharge those returns because you're borrowing extra money to buy more securities. So a margin loan is akin to a real estate loan. Now, when you borrow money in a retirement account under Section 4975, the loan must be non-recourse. That means you cannot personally guarantee the loan. Why? 4975 C1 basically requires that the loan not be personally guaranteed. They don't want the retirement account owner to personally guarantee an obligation of their IRA or 401k. Just a rule. Do I agree with it? It's not for me to say. Simply a rule. So if you do get a brokerage account, a lot of these brokerage accounts will come with margin options. You can still open the brokerage account if you don't tap into the margin. Now, if you are tapping into the margin, you have to make sure it's technically not a personal guarantee. In a lot of cases, it's not because you're using the collateral in the account to satisfy any loan. Okay. Now, there are always bad boy provisions in terms of fraud or other circumstances, which is generally okay. You're not going to be able to open a bank account without those bad boy provisions. So, yes, you can open a brokerage account even if you don't want to have margin for your retirement account. If you are using a margin, just make sure it is a non-recourse loan. Why? Because you cannot personally guarantee an obligation of your retirement account. That would trigger a prohibited transaction. So now let's get into the rules. Okay, so it's pretty established case law, and there's many, many rulings that borrowing cash to buy securities will trigger UBIT. Okay, and I can list a whole few. There's cases going back all the way, 1980, Elliott Knitwear profit sharing plan versus Commissioner, Alabama Central Credit Union versus U.S. In the 86 case, Ocean Drive Corporation, v. U.S. It's a 87 case. Harry Nancy Horton Bartles Trust for the benefit of the University of New Haven v. U.S. It's a 2000 case, and there's many more. Okay, so if you are borrowing hard cash, literally your brokerage firm is giving you $100 and you're putting $100 of securities or cash as collateral and then going out and buying more stock, that will trigger UBIT. Okay, there's pretty much no way around it except using a corp. So if you wanted to use margin because you just felt the benefits outweighed the potential risks and also potential tax, then setting up a C corp would help reduce the 37% UBIT tax to 21%. The issue with the 37% UBIT tax is that it gets triggered at a very low threshold, about 15,000 bucks. Okay, whereas the 21% corporate tax rate is flat. Whether you make 20 million profit or 10,000 profit, you're going to be at 21%. So that's at least some food for thought to minimize the impact of margin if you absolutely want to use it. Okay, so again, borrowing cash to buy more securities, it's clear it will trigger UBIT. Talk about securities lending transactions. Let's talk about shorting, puts, calls. Okay, so Section 514C8 provides that payments with respect to security loans are deemed to be derived from the securities loaned, not from the collateral security in the investment of collateral securities from such loans. So that basically means if you have an obligation to return the collateral security, that's not treated as acquisition indebtedness. So if you're borrowing a security as part of an option transaction for a put or a call, that's not the same as borrowing the cash because you have to return the security, and that does not trigger UBIT. So when you are trading options, puts, calls, buying, selling, shorting, that does not trigger UBIT. That is distinguished from margin, where you're borrowing cash, not securities, and that does trigger UBIT. So Revenue Ruling 95-8 confirmed that neither the gain attributable to the decline of the price of the stock sold short, nor the income earned on the proceeds of the short sale, the premium, held as collateral by the broker, constituted debt finance income, meaning it did not trigger UBIT. The same applies to commodity future transactions. The same applies to security arbitrage transactions. The same applies to notional principal contracts. We talk about interest rate, bets and options. 512b5 excludes from UBIT all gains or losses recognized in connection with investment activities from the lapse or termination of options to buy or sell securities. Okay, so there it is. It's pretty straightforward. Option trading, security arbitrage, notional principal contracts, commodity futures, short sales of stock, they do not trigger UBIT, which is awesome, right? I get it why margin does trigger UBIT. You're literally borrowing cash. It's akin to borrowing cash to buy real estate. Why should the tax treatment be different for real estate than for stock? I get it. But I'm super happy that case law is established for many years that option trading. In fact, option trading is in the tax code under 512b5. So it's not even case law or an IRS ruling. It's literally entrenched in the tax code, which is obviously super helpful for any retirement account investor that wants to trade options. So they have no concern that it would trigger this UBIT tax. And then the short sale stock, Revenue Ruling 95-8. If there's some unclarity in terms of how short sales will be treated in connection with options under 512b5, Revenue Ruling 95-8, it's crystal clear that premiums and just the gain from the decline, the actual short sale, is not a UBIT type transaction, as it does not trigger unrelated debt finance income. So just wanted to share this with you because I get a lot of questions from people that are like, hey, I want to do option trading, but I'm concerned it's going to trigger margin. And I'm like, no, it doesn't. There's a distinguished categorization between just borrowing cash to buy more securities and then actual option trading. The good news, most self-directed IRA, most solo 401k clients are more focused on the option trading route than actually just borrowing money to buy securities. For whatever reason, option trading, whether it's cryptos, whether it's stocks, shorts, puts, calls, options, all not subject to UBIT. Again, whether you're doing commodities, interest, cryptos, real estate, whatever the underlying asset is, 512b5 option trading will not trigger UBIT, and then the short sale under Rev Ruling 95-8 is also clear. So short and sweet, just wanted to kind of educate everyone on the difference between margin and option trading, short sales, puts calls, and how they're taxed and treated differently by the IRS and the courts with respect to the UBIT implications on the potential 37% tax. Now, again, if you are looking to use margin and you just are kind of sold on it and you just want to do it, then you may want to consider doing a blocker corp, which would reduce the 37% tax on gains above 30, about 15K to 21%. So just got to run the numbers and see, kind of see what works for you. But that's certainly an option to reduce the bite of the UBIT tax. That's it. That's another weekly video in the bag. I hope you guys enjoyed it. It's a fun one, important because there is a distinction between margin trading and option trading and short sales. Um, Whether again it's securities or other underlying assets like cryptos, and it's all about education, understanding the rules so you can best navigate them and have at your disposal the most potential investment opportunities and options so you can better diversify and grow your retirement portfolio. So that's it for today. I hope you guys enjoyed the video. Have a great rest of your week, and look forward to chatting with you all again next week. Got an amazing video for you next Wednesday. Not going to spoil it, so you're going to have to tune in to check it out. Hint, yeah, it's going to be real estate, really cool real estate strategy that you're going to absolutely want to check out because it's going to dive into a way that you can potentially use a property in your IRA without tax. Yeah, it's going to be great. So check it out next Wednesday, 12 Eastern Standard Time. Obviously, if you miss it, don't worry. It's on YouTube channel, IRA Financial. You can check it out anytime you want. And if you subscribe, you'll be notified when I go live. So you won't have to worry about missing it. Otherwise, have an amazing rest of your day. And thanks for hanging out with me.